Hello friends, we'll be discussing certain details regarding the consignment transaction, a comprehensive problem basically again, and we'll be solving that illustration for your reference. So when we speak about comprehensive problem, this is one another illustration that we have for your reference. Let's note it down and let's try and solve it so that you have an idea about how to go ahead with the multiple choice transaction problems that we have for your reference. So the illustration has been mentioned here. Let's read it out for your reference. There are two parties to this consignment. One is Ajay and the second one is Vijay. Ajay being the consigner and Vijay being the consignee here. Now, Ajay consigned certain goods to Vijay which was supposed to be sold out at 125% of the cost price. The commission on the sales was 10% at the invoice price. That means if the sales is at the invoice price, then the commission is 10%, and anything above the invoice price, he is supposed to entitled or he is supposed to receive 25% commission there. Freight and insurance which were incurred by Ajay was amounting to rupees 10,000. Account sales that were shown, or rather shown by Vijay, gave out certain details like this. Now the sale happened for rupees 1 lakh, which is constituting to 75% of the consignment. That means 75% of the consignment was sold out for rupees 1 lakh. Selling expenses which are supposed to be reimbursed amounted to rupees 8,000. That means this amount was supposed to be reimbursed to Vijay. 10% of the consignment which valued to 12,500 was destroyed at the Delhi godown, and the insurance company paid 12,000 in respect of it. So the goods that were destroyed were 12,500. However, the amount that was reserved from the insurance company was 12,000 rupees. Vijay remitted the balance amount in favor of Ajay, and now we have to prepare the consignment account and consignee's account in the books of Ajay itself. So let's start with the working first, and then we'll go ahead with the preparation of consignment and the consignee's account. Now, as you know that it is sent out at 125%, that means there is a loading charge additional of 25%. So you have to get back the goods to the neutral value, that means 100%. So you have to calculate that first. So let's take the abnormal loss calculation first and then figure out how much is the loading charge that has to be taken off. Now the abnormal loss at invoice price was mentioned as 12,500, and this was 10% of the consignment value. So that means if 10% of the consignment value was 1,25,000, or rather when we talk about 10% of the consignment value being 12,500, so that is 10%. So what is 100%, or rather the total consignment value which is sent as an invoice price which is above 125%. So let's figure out that. So the total value of the goods is 1,25,000. Now how this has been derived will be figured out. If 10% cost is 12,500, how much is 100% will be? So the answer lies there, 1,25,000. Now the additional 125%, that is additional 25%, is the amount that we have to calculate. So to give you an effective calculation, 1,25,000 is the invoice price which is 125%. That is 1,25,000. So what will be 100% of it? Because it is already set at an invoice price which is 125%. So 100% calculation is supposed to be done. So to do an effective calculation, we'll just cross multiply here. So if you figured out that we have mentioned A and B here, A being the total invoice price 1,25,000, B being the cost price, that is 1 lakh. So the difference between them is 25,000, and that is the loading charge that we have already derived. Now this clears the calculation of the loading charge. Now let's go on to the next working note. Now the next working note calculation will be the abnormal loss calculation. That is 10% abnormal loss that has happened. So the abnormal loss at invoice price is 12,500. That was already mentioned in the question. What will be it at cost? So to figure out that, we have to figure out 100% is how much, because 125% is 12,500. So 100% will be how much is the simple calculation that we have to do. We have to do a cross multiplication here. Now to figure out that will give you the exact abnormal loss at cost. So that will be 10,000 rupees. Now after this, we have to go ahead and calculate the further calculations here. So the proportionate expenses of 10% will be also mentioned here. That means 10,000 is the expense that has been done. So on that 10% is 1,000 that you have to calculate. So the total abnormal loss is 10,000, that is the cost price, plus 1,000 which will be added here. That will be 10,000 plus 1,000, 11,000 here. Now let's figure out the working on closing inventories. Now if you see, out of 100%, 75% has been already sold. So the balance 15% is the closing inventory that we have to figure out. So everything will be brought down to 15%. Now the total Ajay's basic consignment at the rate of 125% is 1,25,000. The consigner's expenses is 10,000, which we have calculated earlier. So the total value of the consignment is 1,30,000, or rather 1,35,000. Now this is 125%. Out of this, 15% has to be calculated on this total. That gives you a total of 20,250. Now this is the value of closing inventory, but this is including the loading price. So loading price has to be removed first, that is 25% on this. So if 1,25,000 is the total consignment value, and out of that only 15% has been left. So 15% of 1,25,000 will give you the difference here. So to give you a bifurcation, let's do it in this way. 1,25,000 is cost plus additional price on it, and 1 lakh is the basic cost. So 1 lakh is the basic, 1,25,000 is the basic plus loading. So the balance 25,000 is also supposed to be taken at 15%. So 15% of that is also supposed to be calculated. So the total closing stock has been figured out. Now let's go ahead and calculate the commission part. Now the first thing that we'll be calculating is invoice value of goods sold, that is 75% of 1,25,000. That gives you a total of 93,750. Now, the excess of selling price over invoice price is the difference that we have to calculate. That means 1 lakh minus 93,750. So the actual cost or the actual invoice price of the goods sold was 93,750, but you have sold it for 1 lakh. That means the difference is 6250. Now this is the calculation that we'll do. So when we do the calculation further, we'll get the calculation in two parts: 10% on the invoice price, that is 93,750, and 25% on the balance 6250. That will give you the total commission here. So we have figured out the calculation of commission, that is 10937.50, or if you can round it off, it is 10938. Now with this we have completed the working note of all the calculations that we have to do. We'll go ahead and prepare the consignment account now. We'll mention all the transactions that we're supposed to do, and we'll quickly come on the profit and loss calculation. So we have mentioned all the items that are a part of this question. Let's read it out for you. The goods sent on consignment, that is 1,25,000, that is 1 lakh plus 25% above the cost price, that is invoice price was 1,25,000. So 125% is 1,25,000 has been sent out. The expenses incurred by Ajay 10,000 will be a debit part of consignment account. The expenses borne by the consignee was supposed to be reimbursed, hence it will be on the consignment debit side. The commission is also part of consignment expense, 10,938 is also on the debit side here. Now on the credit side, we have the sales amount for the consignment. The additional loading charge of 25,000 will be also consignment credit side. The abnormal loss calculation that we did for 11,000 is also on the credit side of this consignment account. And the closing stock that we valued earlier is 20,250, that will also be on the credit side. Now valuing this closing stock, we figured out there is certain as a loading charge. When you know that there is a loading charge, there is an inventory reserve that is created for the difference between the actual price of the loading and the actual cost price of it, that is 18,750. So that is 3,750 that was figured out. That will be on the debit side of the consignment. Now once this is done, we'll figure out whether there is profit or loss in this consignment. The debit side interim total came as 157,688. Let's figure out what is there on the credit side. The credit side is 156,250. That means there is a loss here. So debit side total will remain the same. Credit side balance will be added there. The difference between them is 1438, and that will mark the closure of the consignment account. The interim total that has been calculated is only for your reference. You need not write the same in your exams. Now with this, we mark the closure of this consignment account. Let's prepare the consignee account now. Now the consignee account will have only limited entries, so there are only few entries that we have to discuss about here. So the first entry on the debit side of the consignee will be to the consignment account, that is 1 lakh that was sent out. On the credit side will be the first entry, that is the reimbursement of 8,000 rupees. And on the credit side, again the next entry will be the commission, that is 10,938. Rest, there will be only a balancing figure now because there is nothing else to be mentioned in the wages account here. So let's clear this thing and close the consignee account as well. So the one highlighted by blue here is the bank balancing figure. So this is the amount that can be remitted there, and this is something that has been sent to Ajay. So this is how you solve the comprehensive problem which is related to the consignment, which includes invoice or goods invoiced above the cost price, and the abnormal loss calculation, and the inventory reserve also being a part of it. So I hope this video gave you a clarity about how to go ahead with the calculation of such issues and such problem. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.